Well, Apple shares jump after the U.S. and China agreed to temporarily slash reciprocal tariffs. Yet, despite temporary tariff relief, the tech giant considering price increases for its upcoming iPhone lineup. It's according to the Wall Street Journal. Maxim Group Managing Director and Senior Consumer Internet Analyst Tom Forte joins us now to discuss. Tom, always great to see you. So let's dig into this journal report, Tom. They say, citing sources, Apple is considering raising iPhone prices this fall alongside new features, design changes. As a financial analyst, Tom, you know Apple as well as anybody. You read that report. What'd you make of it?
Yeah, so going back to that March earnings call, Apple was hesitant to say that it was going to take price. It said it was considering raising prices as a way to mitigate the impact of tariffs. So I do think that it seems logical to me that the company may take price on the iPhones. The good news all along for Apple has been that it's a premium brand. It has pricing power. So while not able to offset 100+% tariff from China if necessary, it can raise prices to mitigate it. So I do think that there's some logic, or that makes a lot of sense to me, that Apple may want to raise prices on the iPhone independent of the tariff situation.
And so they do have pricing power, Tom. I guess, how much power do you think? I was speaking, just to put some numbers on it, I was speaking this morning to Gene Munster, now with Deepwater Asset Management. I asked Munster this question, and his take was, well, he thinks if a 10% basic tariff does remain in place, if that's the case, Tom, then he thinks Cook does raise iPhone prices 5% in the fall. He doesn't think 5% would dent demand materially, but those numbers, I mean, roughly, Tom, do those make sense to you?
Yeah, so Josh, as you know, when Apple raises price, it may raise the price of the Pro, but not the base model. It may raise the price of the Pro Max. It may raise the price of, getting higher memory. There's a lot of different levers that Apple can pull when it comes to increasing prices. On a notion of a 10%, call it permanent tariff, a 5% price hike makes a lot of sense to me. But I do feel like Apple's benefiting from carriers who are, once again, heavily subsidizing the purchases to improve their competitive set, or where they stand competitively versus their other carriers. So in that regard, maybe you could argue that they could raise prices more than 5%. So 5% I think is a reasonable number, but I would argue that potentially the full 10% is also possible.
Interesting. I mean, more broadly, Tom, I'm just curious to get your take. How excited do you think Apple investors should be for that new iPhone 17 family that we would expect to get unveiled in September?
Yeah, unfortunately, Josh, I guess the answer is not very excited. So I think that what we saw with Apple Intelligence is that artificial intelligence wasn't resulting in the super cycle we hoped for. It wasn't even resulting in an upgrade cycle half as good or nearly half as good as what we saw with 5G. So I think right now it's unclear to me what'll be the needle mover, flip phone, meaning like form factor, instead of Apple Intelligence. But I think the good news is that now they have a much more benign tariff environment, and there's reason to feel good about the iPhone, even if we can't get super excited on an AI upgrade cycle, as an example.
I know you're a hold, Tom, on Apple. What are you talk to clients and they ask you, Tom, what are upside risks I need to think about? What do you tell them?
Yeah, so as far as risks to having a hold rating on Apple, I think the risk would be that you would have much stronger sales of the iPhone than you've had. So the argument there would be that they finally make the adjustments to Siri that they've been talking about. And number two, you saw a very significant improvement in trend in sales to consumers in China in the March quarter versus the December quarter, down low single digits versus down low double digits. So if you saw a material improvement in sales in China, I think that would also be risk to the upside as far as our hold rating goes.
And Tom, President Trump also said this morning, he spoke to Tim Cook, and that Cook will up his numbers, he said, build a lot of plants in the United States. As a financial analyst, what, if anything, do you make of those headlines when you see them, Tom?
So yeah, Josh, I hope you, like me, were blown away that Tim Cook was naming on a by-state basis where they're going to expand in the U.S. on the last earnings call. And I apologize that I can't name the 9-10 states off the top of my head. But I think that clearly, my thesis is that the trade negotiations between China and the U.S. or the US and the rest of the world. What success looks like is getting chips made in the US, having a pharma supply chain that's a little more US and a little less China than it is today, less so much for apparel and other categories. So it's unclear to me that we'll ever see an iPhone made in the US, but I do think we'll see chips and we'll see a lot more items made in the US. And Apple clearly was highlighting that in the last earnings call where Tim Cook named the 9-10 states where they're going to expand their efforts.
You know, Tom, we're talking all things Apple here, but you cover a lot of names. This US-China trade truce we see announced today, what other names in your coverage universe, Tom, could be materially impacted by that?
Yeah, so clearly it's beneficial for Amazon. And then on the smaller cap front, it's beneficial for the toy maker Jack Pacific, and then for the logistics company GigaCloud, which has a lot of their logistics where they're connecting sources in Asia with US marketplaces like Amazon, like Wayfair. So any company heavily dependent on China, today was very good news for that company, clearly beneficial for Apple, also for Amazon, and then from some smaller cap companies as well.